right, I think we are live. Do another market close live stream Q&A. Q&A. Ask me anything. Hopefully you guys are doing well. For those of you who are watching this after the fact, this is a recording of a live stream. I've been trying to live stream more and more around the market close of the weekdays. Been doing it at least 2 times a week for the last couple of weeks. Eventually, I'd like to get to the point where I'm doing this pretty much every day as the market closes. So let me know if you like it, and I'll keep on doing it. Also, in the live chat, for those of you who are watching this after the fact, you can see a live replay of the chat, so you can see the questions come in that I'm answering. Let me know, guys, that you can hear and see me okay. I know that I've had some tech issues on the last couple of live streams. And just so you know, I'm working on it. So a little bit of a background on my internet issues. There's no fiber in my area. I've had fiber in the past, but in my area, there's no fiber at all. And so a couple years ago, I looked into getting an enterprise level line, a dedicated line brought in, which would be fiber to be dedicated. It's like what commercial buildings would use, so that you're the only one using your own your own line, and it's symmetrical, guaranteed speeds, no throttling, super reliable, all that. And it was going to be like $1,300 a month, which I know it sounds kind of crazy for internet, but for a business expense, to make sure I can do my Zoom calls, my webinars, my live streams, all that. And I upload hundreds of gigs basically every day to my editors for my videos and all that. So it was like, yeah, it was no brainer I was going to do it. But then if it's too much to bring the line in, then they charge you for the install, and it was going to be like $250,000. So I was like, all right, well, that's not worth it. So I've just been kind of dealing with it. So it's been a couple of years now. Infrastructure has been built up, and so I reached out to a couple different companies. And on Monday, I should be getting an upgrade on my internet. It's still not fiber, but it's switching over to a new plan that should be more reliable. And then over the next month or so, I've got 2 companies looking at a dedicated line, see if the infrastructure is built out to get that, and then hopefully it won't be a $250,000 install. So anyway, I'm working on it, and starting next week, it should be at least a little bit better. And then hopefully within the next couple of weeks, it should be perfect. So, all right, let's see. I miss the mustache. Yeah, me too. My family doesn't miss it though. They asked me to go back to the beard. So I tried Starlink actually. So Starlink, I've got a mountain blocking part of the sky, so that was an issue. And then the second issue is upload speeds, which are the biggest thing that I need. And the upload speeds were actually worse. So and it was also like 5 times the cost because I needed the larger data limits. So it was slower upload speeds and 5 times the cost, so it wasn't worth it. I did try it though. My watch, it's an Omega Seamaster 300 Heritage Edition. I mean, you can't get that. Okay, sorry, that's upside down, but it's like the dark blue denim color with like the beige. And it's the stainless steel one. So I really like it. I don't have a bunch of this is actually my only like real watch. But I wear it every day. It's my daily, but it's also nice enough where I can dress it up. So I do like it. Let's see here. I don't live in the sticks. That's the worst part about it. I'm just in like a little little area surrounded by a couple mountains. That's just isolated from the rest of the. I'm like basically in the city, but yeah, it's crazy. All right, let's see here. Let me find some good questions. All right. what are your reactions to some of the things that Candace and Tucker are expressing regarding? I don't even want to say those words on here. Okay, so let me explain why I'm struggling with answering this question. Um, when in the Bible, in the Gospels, when Jesus was talking, he spoke in parables. Parables, from his own words, the reason why he spoke in parables was so that the people who were his enemies would not understand what he was talking about. That was the express purpose of speaking in parables. And the people who had ears to hear and who were actually, looking to follow, they'd be able to figure it out. Um, so I try and take a similar approach in the things that I talk about and the words that I say on YouTube because um, I would rather be shrewd with the way I talk about things than try and have dignified, indignant justification about, hey, I was trying to tell the truth and I was trying to say things and they kicked me off. And then I'm just, I can't help people. I can't spread the truth. I can't talk about these things anymore because I was just not being shrewd about the way that I talked about them. So there are things like, the big world altering events that happened in 2020. There I haven't said those words on YouTube since January of 2020 was the last time I said the big C word. So I don't really know if there's any issues with talking about the things in that comment there. But it does it does seem like does seem like there might be some problems talking about those things. Um, I don't have a very strong, or I should say, I don't have a very well educated opinion about those things. So I'm not. I don't think I'm in a position to express like a really strong opinion. I do think the more you study history, the less you trust government, and the more you the more you go down the rabbit hole and see. There's that classic meme. It's like the video where it's like the audio's in the background. It says, "Next time you think the government wouldn't do that, oh yes they would." And it's like the atrocity, all of the major atrocities throughout human history have been done by governments. It's just a fact. And it makes sense because they are the ones that have the legal monopoly on violence. That is almost what defines what a government is. So I I'm not surprised by any evidence that makes things look like it's darker and deeper and um uh you know uh a little bit more involved by certain governments than it would seem on the surface. I'm not surprised by that evidence at all. I'm also not completely convinced because, like I said, I haven't done a whole lot of research on those things. So I don't have a strong or educated opinion about it. All right. Let's see. Next question. The what year is the watch? It's called the Heritage Edition, but it's a new watch. So in their Seamaster line, in Omega's Seamaster, and in their, I believe, their Speedmaster line, they have a Heritage Edition. I don't know what it's called, like a Heritage Edition like category underneath each of those, and they're meant to look a little bit more old school. But I got it this year, or I should say, my wife got it for me this year. So it's not an old watch. It's the Heritage Edition of the new Seamaster. You mentioned last stream that you love Berkshire and Amazon. I understand Berkshire. What's the GOAT level attraction to Amazon? I I I know Amazon a little bit better as a company because that was my first like real job. I was working for Amazon, and it was an intro level job. It was actually, I was miserable. It was a global security position. So my job was literally, like, it sounded really cool when I was applying for it, and I was really excited for it. And it was like, you're in charge of monitoring, global security issues, around the globe and blah, blah, blah. Turned out the actual job was staring at a computer screen where you have all of like the like, You can see like a dashboard of every door, every window, every gate, every like security type of, you know, building infrastructure in your region in the world. Um, and then if let's say a door gets, like, something gets in the way, the door doesn't shut. It can't shut all the way. After a certain amount of time, an alarm will sound off, and local security will have to go move the object and shut the door. And if they don't, then I get a red blinking light after it's been happening for like a minute or something. Security cameras, same thing. I get an alarm after like a minute. And so then I have to literally call the local security and say, hey, this door is saying that it's open, go fix it. And then they'll tell me, oh, it's a broken alarm, or they'll say, okay, we fixed it. That was it. It's like literally I was doing the job that a software program could do. And I was, it was miserable. But the reason I bring it up is because I was able to really see inside the culture of Amazon. And it is they are ruthlessly committed from the top to the bottom of operating as the world's largest startup. Everything they do is, and this is culture wide, this is embedded, this is from top to bottom. As frugal, as cheap as possible, as innovative as possible, pushing the edge, trying and experimenting. It's it's really a startup culture, a lean startup culture from top to bottom. Um, and those guys work harder than anybody. Like, most positions there are salary, and they're 80, 90 hour. It's 7 days a week, no time off. It's because they're looking for getting rich from it. And and so because of that, it's like I I know what that kind of culture, it's the reason why Amazon has been able to get where it is today. And there's a lot of market share in all of their, um, you know, all the places that they have business in. There's a lot of market share left to take and to make. It's not just taking market share, it's making market share. And so because of that, that's one of the reasons why I'm super bullish on Amazon. Um, so that's the answer to that question. Let's see here. Next question. Spy puts all in. During times like this, I'll pull up a chart. I really like trading, but on these big rallies, like even during like this time, it's like you get a couple good green wicks, you're going to have a little bit of a pullback. So try and play for that. And then when you do have the pullback, you roll those into some longer term calls or roll them back into shares. Um, and if you do have some longer term calls and you don't like to play by buying puts, then like one thing that I was doing was selling some of my longer term calls, rolling them into shares, because shares are so much less leverage that when you get this dip, you don't lose as much on the shares. You can roll that back into some calls. So just flip flopping back and forth, not your entire core position, but just with a small part of your position, trading back and forth, and you capture a little bit of gains through that volatility. So, so I mean, that's what I've been doing for the last couple of weeks. And you know, the long term bias is obviously bullish here, and that's why we have hedges to protect. But that's the way I prefer to play what looks like short term volatility in a structural bull market. Let's see here. Are there companies you won't invest in for ethical reasons? That's a really good question, and it's really tough. So I've got some huge thoughts about this. So number one, the purpose of investing is wealth creation. Um, in fact, it's maximizing wealth creation. So even people who talk about, oh, I invest for income, or I invest, you know, for, you know, low volatility. When you pull that apart, what they're really saying is, I need a certain amount of wealth right now, and so I need to maximize for that. And if I invest for growth, then maybe the volatility is too high, and when I need the money, it won't be there, which basically just means I will have less wealth when I need it. So the driving purpose, the only thing that is the only purpose for investing is to maximize long-term wealth for, you know, for over the time frame that you need it. And so with investing for, you know, when you're considering like ethical or moral reasons, I understand the hesitancy to purchase shares of something of a company that does not, that acts in a way that you don't agree with. So a couple things that, like, a couple companies that I would say I kind of agree with that on would be like, I don't know, like Coinbase and Robinhood and, um, I don't know, like United Healthcare and, I don't know, maybe tobacco companies, although I've kind of been, changing my view on that because of some of the nicotine research that's been coming out recently. But I get the sentiment is what I'm trying to say about, like, hey, I don't want to invest in this. But there's also two counterpoints to that. Number one, when you invest in a company, you are not providing them with any additional capital. You're not you're not directly helping or hurting their ability to do business. Now, if you invest in an IPO or, in a, a secondary public offering, or if the company has shares that they're issuing, and you're soaking some of that up, then for sure, then there is an element to, like, you are providing, investment capital to the direct business. But for the most part, most normal companies, when you're buying and selling shares, you're taking ownership from somebody else who doesn't want it. And so the company itself is going to have the profits or the losses that they're going to have, regardless of whether you or the guy on the street next to you owns the shares. Which means, from a certain perspective, you could say, okay, well, there's this company doing this business that I don't agree with, but if I get the profits from that instead of somebody else, then I'm going to do more good in the world with that. So I'm almost taking profits from something doing bad, and so I'm able to convert that into good. Um, so it's a nuanced topic for sure. There are definitely companies that I don't invest in because what I would consider moral reasons, but at the end of the day, the moral reasons that I attribute towards my investing decisions usually boil down to, I think in the long term this will hurt the company. And so if I see a company that constantly engages in shady business and that hurts their customer at the expense of, other people, or does things that I think are immoral or incorrect, at the end of the day, usually if that's serious enough, it impacts the business and it doesn't perform well. And 99 times out of 100, especially the more free the market is, if a company is doing things in a moral way and doing the right thing and, doing good in the world, then usually that's going to also result in good performance. So, I get the sentiment, but, I think there's a lot more nuance than that. And usually, if you put certain ethics or morals on top or in front of wealth creation as the purpose, you end up investing in companies based off of criteria that will just lose you money. So there are funds out there that do this based on, like, the ESG was a big example of this. A lot of people said, okay, morally, I don't think we should be investing in companies that do anything, that's not green or social justice or whatever. And so a bunch of people invested money in these companies that were doing things the right way there. And those were things that had nothing to do with business, and it ended up destroying wealth rather than creating wealth. Okay. Let's see here. Next question. I'm all out and have been for 3 months. It's hard to sit put on the sideline. Yeah, because it's very, very difficult, borderline impossible to time the market like that. Okay, so you've been out for 3 months. My question would be, like, were you out before the April crash? And if so, when did you buy back in after the April crash? And if you aren't able to look back at that time period, and because that's relatively recent, and if you're not able to look back in that and say, yeah, I timed the market pretty well there, then what makes you think you'll be able to do it this time? Like, what if there's only a 15% drawdown instead of a 20% drawdown? What if it's a 5% drawdown instead of a 10% drawdown? Like, you're if you didn't have any objective metrics to determine when you should flip out and back into the market, what makes you think you're going to randomly guess correctly this time? And so the way to avoid those mistakes of just being on the wrong side of the market is to be invested and to be hedged. And if you want to pay for that hedge, you're just outright, then you're going to just guarantee yourself a small loss for the cost of the hedge, and then you still have the upside. And if you want to have that hedge for free, then you sell calls on that to pay for the hedge, and you cap your upside in the meantime. But again, still at the end of the day, worst case scenario, you get a similar to a cash return on that, which is the same as you being out of the market. So I don't like being out of the market. And then also you look at some of the like Warren Buffett, it's like biggest record cash pile in history. I think it's only 23 or 25% of Berkshire's assets are in cash. So it's like, well, you're not. you, do you think one of the most conservative investors in history, that is also one of the best investors, being more aggressive than you? Do you think that's a sign that maybe they know like a little bit more? So I don't like being all out of the market. I like hedging more. Do you think next week we'll have greater pullbacks? I don't know. I wouldn't expect that the volatility will be over immediately, but I'm longer term. I'm definitely bullish. Like weeks to months, I'm definitely more bullish. Like I think we will hit new all-time highs within the next couple of months. Even though even in the midst of a lot of volatility. How much liquidity do you think will be pumped in all at once the government employees all get paid back at once? I think there's over 1 million that were furloughed, and the 401k funding, all that. Yeah, that will definitely have some impact. That's contributed to the volatility. And it's not enormous all by itself. It's the cumulative effect of all the easing that we're going to see over the next couple of months that's going to have a bigger effect. So we've got quantitative tightening ending in 2 weeks. We've got mortgage-backed securities will still be sold off in order to buy more T-bills. So that's direct liquidity through, fiscal spending. We've got the Treasury general account will be spent back down to refund all the paychecks and all those 401k contributions. And we have people being replaced at the Fed that are, more interested in seeing interest rates lower. So the cumulative effect over the next couple of months, I think, is a much more defensible position than just, hey, like, is there a date like the end of November where we're going to see a big spike in the market because everybody makes up for their 401k contributions that was, furloughed by the government. So, but I have a video coming about that tomorrow morning. So if you're interested more in all of the easing that we have coming over the next couple of months, that's coming out tomorrow morning. Could you do a video about what if the Supreme Court overturns the tariffs? Like, what does the Fed do? The Fed won't do anything there. But the Trump administration will try and find another way to implement something that is equal to or similar to tariffs. I don't know what that looks like, but they have said they have a plan if Supreme Court rules that they cannot do it, which I think they should, because tariffs are taxes, and taxes are things that is in the Constitution. It says that's the job of Congress. So I definitely think, per the Constitution, tariffs are executive overreach. So I hope that, just for the sake of upholding the Constitution, the Supreme Court rules that the president is not allowed to do this. But we'll see. All right. What are the actual gains of the S&P 500 inflation adjusted since 2020? And do you think the inflation will ever stop? Okay, so you can't just adjust for inflation, because there's no such thing as the inflation rate. So everybody understands, okay, the CPI is measured in a certain way. They do deflation built into it for things like, technological increases. Like if a washer and dryer moves from having a physical knob to digital buttons, they say that's a quality increase. And so even though it went up in price, we don't list it as an increase in price because the quality went up as well. And so there's all sorts of shenanigans that keeps the CPI lower than it should be. But you can also make the same case that, like, you can't just use the same measure from 20 years ago. Like, a lot of people say, oh, the 1980 way they used to measure inflation is the proper way to do it. And if you did that today, we'd have like 9% inflation. Well, yeah, but that's an improper way to measure inflation, because it's like, everybody used to have things like, I don't know, like radios and sewing machines and like compared to your income, clothes were a lot more expensive. And there's been a lot of actual real deflation in decreasing the cost of producing and buying real goods that has happened over the last 20, 30, 40 years that you do have to account for. And if you just have a stale measurement of prices, it's like, why are we still measuring? You have to replace, sewing machines in the index for something else because very few people buy those things anymore. And so the bottom line is there's no real way to measure this. Also, when prices go up, consumers change their behavior, which stops those prices from going up. Like if ribeyes get too expensive, people start buying New York strip instead. So then ribeyes stop moving up in price, which in and of itself changes the pricing. And so you have to measure quality of life differences, which is subjective. It's literally impossible to measure true inflation. The best proxy for it, though, long term, is gold, because over the last 5,000 years, gold maintains its purchasing power for things that do not get cheaper from deflation. So what you have to do is you have to do SPY divided by GLD. So measured in terms of true purchasing power, this is what the S&P 500 has done for the last, I don't know, that goes back to 2011. So the last 15 years. So measured in true purchasing power, the S&P 500 has gone down and it's at the same level that it was, 10 years ago, basically. And so when you look at this, you're like, oh, that's not a bubble. It's this is not an extreme price for the S&P 500 when you measure it in terms of real purchasing power. So it is definitely gone down, obviously, because gold has gone up and a lot more than stocks have in general over the last year or so. But when you look at it like this, you realize, oh, this is not just like an S&P 500 bubble or a stock bubble. You look at QQQ divided by GLD. So you're pricing the NASDAQ in terms of gold. It's like, again, like in general, there's an uptrend here, but we're not at all-time highs by any means. This is not overly stretched. This is not anything crazy. And so that's why when you hear people talk about like, oh, okay, well, every time you buy, I think this is Howard Marks, every time you buy the S&P 500 at 23 times earnings, then your forward return over the next 10 years is in between 2% and negative 2% every single time. It's like, yes, but the last couple of times that this has happened, or most of the times that this has happened, we have not been in an environment where we have 120% debt to GDP ratio with $2 trillion deficits that are have to be financed through debt monetization. We have a dollar devaluation scheme that is necessary to prevent the government from defaulting in nominal terms, that is guaranteed, and it must happen. There's nothing that's going to change that. It will not change. And so that alone is what drives the higher valuations to protect the purchasing power. And that is why it's different this time. It's not because these valuations are justified on an earnings basis. It's because what are you comparing it to? And when you compare it to gold, it's not extreme. When you measure it in gold, it's like, no, gold is at all time highs as well for a reason. And so you have to take into account what the money is doing and what denominator you're using to look at. Okay. Let's see. Can you explain the fundamental reasons for Bitcoin selling off? Bitcoin is an asymmetric trade at the end of the day. It is a potential future money. And if people decide to use it as money, then it will go up a lot more, many times more than the current price. If people don't decide to use it as money, it goes to zero. And the volatility along the way is the market pricing in the possibility or the likelihood of it becoming money in the future. Now, in the short term, it's just liquidity, fear, greed, natural dynamics like that. When you get up to new extreme highs, you have profit taking. And that's the main thing that's been going on here. We've seen a lot of original Bitcoin holders, wallets that haven't moved in like a decade or longer, have been liquidating everything. And who knows where it's going after that, but we've seen that many, many times over the last couple of months. So that I think that's the main driver here. But in my opinion, it doesn't change anything about the long-term outlook here. And that's why I've always said a 5% allocation to Bitcoin with your initial investment and then 5% allocation with your dollar cost averaging is, in my opinion, a really good place, because worst case scenario, then you lose 5%. Best case scenario, you know, triple or quadruple your portfolio. And so treating it like an asymmetric bet with position sizing for risk management, in my opinion, is the best option. Let's see. Do investment companies like Fidelity have to invest in proven profitable things like gold with 401s and 403b accounts? I don't know what that question means. Normally in retirement accounts like 401ks and 403bs, they do not give you an option to invest in gold. You can do through the mutual funds they allow you access to. You can do stocks like big stocks, little stocks, international stocks, American stocks, or you can do bonds, corporate bonds or government bonds, and you can do a mix of any of those. Let's see. Next question. Do I think the government is necessary? No. Anything the government does can be done better by the free market. And I need to clarify, because a lot of people hear that and they're like, oh, well, if you don't have a government to prevent something like, you know, violence and murder and violation of rights, then people will just do that. And it's like, well, the definition of the government is the violation of rights. If it doesn't violate rights, it's not a government, because a government takes money to fund itself through force, which is violation of rights and violence, and then uses that in order to violate people's rights. So if you don't have that, you don't have a government. So you're basically saying, well, in the off chance that somebody tries to violate people's rights, we should give an entity a legal monopoly on violating people's rights to prevent that. So we need a guarantee that it happens in order to prevent the possibility of it happening. And so just because you don't have an entity with a government with a monopoly on violence doesn't have anything to do with protecting yourself and your property. In fact, the communal defense of individual rights and property rights is 100% morally justified and allowed, and does happen when with the complete alignment of no violation of rights. So no, governments are not necessary. Read the book. It's called The Ethics of Anarcho-Capitalism. It's very good. The lighting is bad on your computer. The screen is too dark to see. Oh, that is good to know. Thank you for telling me that. I will then in the future try and change to white mode on my charts. I'm assuming there you're talking about the chart when I show you my the stock charts. So I'll switch to light mode when I do live streams in the future. All right, let's see here. I understand you're not interested in any other cryptocurrency aside from Bitcoin, but can you do a quick TA review of Zcash? It's a privacy coin that's been trending. No, I will not do technical analysis on that, because I don't want to even it's possible the chart looks really good, and I don't want to, I'm opposed to doing anything that would be perceived by anybody as promoting something that is not Bitcoin. Or I'm sorry, a cryptocurrency that is not Bitcoin, because I fundamentally do not believe in it. And Zcash is no different. It seems like there is a big insider pump scheme that is probably ending right now, but has been going on with Zcash. So who knows? We don't know the future. Maybe it does, surpass Bitcoin and it becomes used as money more in the future. But it does seem like there's a big coordinated insider pump potentially to liquidate to bag holders. All right, next question. Do you think Bitcoin is more similar to gold or SPY? Bitcoin is more similar to gold in its characteristics of what it is and what it does. Bitcoin, in terms of its price movement, is way more similar to SPY, more similar to NASDAQ, more similar to hyper growth technology stocks, which makes sense because it is a new monetary technology. Think of it like PayPal. It's like a payment network. It just happens to use its own currency instead of sending, dollars. And so in terms of its price performance, yes, it's a lot more like a leveraged tech stock. In terms of its characteristics and what it is and how it works and what it does, it's a lot more similar to gold because it's not an asset. It's not a company. It doesn't produce income. It doesn't produce dividends. It is a limited supply monetary technology. All right, next question. This S&P 500 measuring gold, did you make this up? Only see you talking about this. Seems genius. No, I did not make it up. Not I haven't I really I don't know if there's anything that I could confidently claim that I made up. um Most people actually today, that's the saying, if I can see farther, that it's just because I stand on the shoulder of giants. It's like I've just spent a lot of time learning from a lot of people and curating what is good and throwing out what is bad, chew up the meat and spit out the bones. Um and so measuring things in gold is a very old idea. Obviously, that's how things were measured for all of human history. And only in the last 50 years have people gotten away from measuring things in gold. But so it's a very old idea, and a lot of people do things like that. So when you measure real estate in gold, there's no bubble. When you measure stocks in gold, there's no bubble. When you measure things like the cost of clothes, they've gone down over the past couple hundred years because it's cheaper in real purchasing power terms. It's cheaper to make clothes today than it was 50 years ago, 100 years ago, 200 years ago. When you measure food is cheaper today priced in gold than it was 50 years ago, 100 years ago, 200 years ago. And so things that get cheaper with technological growth and real deflation, that shows up when you price them in gold. But things that don't get cheaper, like you can look at the price of a custom three-piece suit, that requires the same amount of human labor today as it did 200 years ago. And so the price measured in gold is the same. It's about 1 ounce of gold for a custom three-piece suit. And it's been that way for the last 200 years. When you measure the price of like an army captain's salary in gold, I believe it's like 35 ounces of gold for the year. I could have the number wrong on the exact number of ounces, but that's the same salary that a Roman centurion was paid. And it's similar position, an army captain, Roman centurion. So 2000 years ago, the same human labor for the same role, the same job is, it pays the same when you measure it in gold. So things that don't get cheaper or haven't gotten cheaper yet from technological deflation, purchasing power is the same. Things that do get cheaper over time, that is reflected in the price of gold as well. That's why I always say gold is your savings account. That's why I price things in gold like the S&P 500, because it gives you a good idea. Is this on sale or not? Like, are we in a bubble? And so it's like, it makes it a lot easier to see, especially over the long term. Let's see here. Next question. Not even Ethereum. Nope. It's not necessary and has not. Yeah, no, not Ethereum. The more I learn about Ethereum, the less I like it. Let's see. Next question. Analysis on Duolingo. Let me give you my non-chart, fundamentals opinion on Duolingo. Companies that if Duolingo is going to survive AI, which is basically like if I can get I can get AI to do any AI to do the exact same thing that Duolingo does. So if companies like Duolingo are going to survive, they are going to survive based off of brand alone. Um, and so that's similar to like the position that I'm in. Like, it is possible in the next 5 years, there's a clone of me, an AI clone of me that talks about the same things I talk about, has similar opinions to me, and they've designed it to look just like me. And so that's where brand comes in, and I think actually that's one of the reasons why I'm starting to do these live streams more, is because I think in a world of infinite computer generated content, real person authenticity, the value of that goes up, because that turns into a scarce resource then. Like, knowing that you're hearing the opinion and hearing the words and seeing somebody who's a real live person. I'm not, this is a guess, but my estimation is the value of that goes up as the infinite content from computers just takes over everything, because it drives the value and the price of that down as the supply goes up. All right. I'm going to do one more question here because the market is closing, and I have to film some videos, because I'm still filming videos. I'm not just doing live streams. All right, so let's find a good one here. Are we seeing institutional money that's going to enter the market before year end to boost returns? Or is there smart money waiting for a major correction? Curious your thoughts in light of comparing prices to gold. Yes, it seems as if there's more institutional money that has been looking to get in, because largely they drove the April crash as retail was buying, and waited way too long to start getting back in, and still are underexposed to equities, and have been driving the price up over the last couple of months, especially on dips. And so I think into year end and possibly after, we're going to see that continue, which is why you see such giant green days on the market after the big red days. So there's a lot of money that needs to get equity exposure again. And when you have extreme fear near market highs like this, that's a bullish indicator. So anyway, yes, I could be wrong about this, but my best guess is that through the end of the year, we'll continue to see the market push higher, even amidst volatility, because big money is buying up all the dips so that they can build up their exposure to equities again before the end of the year. All right, guys, that is the last question here. Let's take a look at what the market did real quick, and then we'll end. I gotta run. All right, so Bitcoin. Let's see, this is the internet thing I'm talking about. Won't pull it up. All right, there we go. So Bitcoin's down more, past 100,000. My next level of support is 92,000 here. So we'll see if that holds. Gold off the bottom, but still down 2% on the day. The S&P 500, not the best close, because we have this big wick on top. And so we didn't have the best close. We closed underneath yesterday's close. But we did hold the 50 simple moving average there, held above that. So not completely out of the woods here yet in terms of downside risk. It's not the most bullish, kind of like this on Friday, November 7th. That was a pretty bullish candle. So definitely not as strong as that, but good that we held the 50-day if you're bullish. And then NASDAQ, same. We've got treasury yields going up, bonds are getting sold off. So the end of the week, we'll see what happens over the weekend. Usually there's some big news, something comes out of the White House, so we'll see what happens. And I'm anticipating more volatility, but ultimately higher and higher over the next couple of months. So, all right, thanks for joining, everybody. Appreciate all the great questions, and try and see you again on Monday at market close.